ladies and gentlemen. That's right. It's going to be everyone's favorite time of the month, not the bad time of the month, okay? We all know what that one is, but we don't like talking about that. Am I right? Am I right, men? Come on now. We're talking about stocks to buy for the month of March 2021. I have 3 here for you today. And again, market at some pretty high levels here. I do some digging to find some good stocks for you, and I think I found 3 that are pretty decent options for you here. So let me know what you think in the comments, what your opinions are, some stocks to look at as well for other people to look at. But let's go ahead and let's roll right into it. We're going to start right off with the stock that's been here quite often in Facebook. So let's be honest, I've got a lot to talk about here with Facebook stock for many reasons. There's a lot of reasons why I think this thing's a buy. So I look over the last year on this stock, and I see the company has gone up around 31%. Not a bad one-year performance for sure, but it is in line with the market. So that's a pretty important point here we'll get into in just a second. Obviously, everyone knows Facebook, the main platform itself, but how about the companies they own? I mean, this is just a list here of all the companies they own, most notably Instagram, WhatsApp becoming a major part of it, but look at all these acquisitions over the years. Son of a gun. I mean, this is Oculus in there for the video game exposure. This company owns a lot of different companies, so there's no doubt about it. They own a lot, and that adds to the revenue. Again, their main source of revenue here, it comes from advertising. So why, Facebook's been around a long time. A lot of people think it's dying out. A lot of people were thinking there was the get off of Facebook phase, which there are still some people who believe in that are, getting off the platform. But let me just tell you, I have proof that it's not necessarily working to the way people maybe say they're doing it. So if you look at their most recent earnings slides they posted, you see an incredible chart here, which shows daily active users on this company, which in 2020 has taken off at incredible rates. Not only just in general, really, really good numbers, but there's obviously positive growth here, but the growth rate has actually increased over the last 4 quarters because more people have time at home and they're using more social media. Monthly active users, you see a similar story here. Consistent growth rate then, starting Q1 2020, we see even higher growth. It's substantial. Average revenue per user, that's right. Continuous growth there. Family daily active people, continuous growth. And this is even pre-pandemic. This isn't one thing that's entirely based off of that. But from a revenue standpoint, how can anyone argue this chart here? You can't argue the revenue chart here for Facebook. It is incredible. And not only are we seeing advertising rates, which got hit pretty hard this year, they still managed to have great numbers in terms of their revenue. And even this most recent quarter increased their other revenue, which is from companies such as Oculus, increase by a significant margin. So we're seeing this company is multifaceted, but advertising still obviously the vast majority of the business. But still, this is incredible numbers to see. Year-over-year growth of $7 billion. I mean, son of a gun. That's what I call crazy numbers there. So again, when I talk about valuation with the stock, this is top of the line here, okay? This is a stock that I think has been so unfairly treated in the market for many reasons. This stock should be up a lot more. If you look at what they've been able to do, this company's trading in a market cap of $733 billion, worth looking at. We'll look at the revenue here. A trailing PE ratio of 25.5 and a forward PE of 23. When you see numbers like that, what does it make you think of? Does it make you think of a stock that is growing? I don't think it would, because this is typically reminiscent of, first off, the average PE in the market right now is over 30. So the fact that this company is below that is seemingly incredible to me. But this has you thinking of in a normal time in which the market is not a little bit inflated. You would expect maybe a retailer growing sales 1% on the year to be posting up these type of numbers. Price to expected growth 0.99. I mean, are you kidding me? Let's take a look at the revenue line and tell me if you think this is fair. Last Again, we saw $7 billion have been increased in the last, if we're looking quarter over quarter. If you look for the full year, 2019 they brought in $70.6 billion. They brought in $85.9 billion this year. What in 2019? Trailing 12 month, it's even crazier, man. What's going on? I don't know how we've been so unfairly treating this company, which has been growing by tens of billions of dollars, yet trading at a PE ratio under 25? What is going on here? There are stocks that are growing by single digits easily, when this company is growing by 20 plus percentage, that are trading at way higher market caps and way higher trailing PEs. I don't know, maybe not market caps instead, but trailing PEs, it's a crazy. I don't know, I find that quite crazy. Quite crazy to me, in my opinion. If you look at annualized revenue, sitting at $85 billion in annualized revenue, with a market cap of 733, for a company in this massive of growth mode, seems pretty cheap. But again, I bring up valuation because I look at other stocks. Look at other similar stocks over the last period. Snapchat, again, lower stock price overall, but the stock's up 350%. And it's important to look at valuation because stock price doesn't always mean everything. I look and I see the market cap of this company. Right now, we'll give a comparison from March to December. In March, this company's market cap was sitting at $17.12 billion, now sitting at $75.27 billion. We're talking about a growth of $60 billion on this market cap. In the meantime, their sales, their revenue line only went from 462 to 911 million. $911 million, trading in a market cap of $75 billion. Now that is what I call some quite incredible valuation. You're talking about over 75 times the valuation in that perspective. And again, over the time, the stock went up 300%. But we're looking at market cap here. The market cap went up by a significant margin. We're talking about 5 times that amount. It's incredible. When, meanwhile, Facebook, if you look at their market cap, in the same time period, went from $475 billion to $778. So really, this didn't even double in terms of its market cap in this time period, yet it saw revenue increase by, that's right, much higher amounts. I mean, what can you say here? So the valuation of Snapchat is significantly higher. Again, we don't even have a PE ratio on this company because they don't make earnings. They don't make net income. So the valuation on this thing is infinitely higher. Price to sales of 38, where Facebook has a price to sales of 8.6. You look at its other compatriot in Twitter. Twitter over the last year has also seen some great rise here. 115%. Stock price doesn't mean everything. But the market cap in this time period went from $19.26 billion to $43.1. So the market cap doubled, went up $23 billion. What do you think the revenue line did here? The revenue went from $807 million to $1.28 billion. Around a $500 million increase there, while the market cap increased by $23 million. Price to sales of 16.3, twice as high of that of Facebook. Are you kidding me? Twice as high. I don't know. Price to book, everything's more expensive on all of these competitors in the same industry. That's my main point here with Facebook, why I think this thing's a buy. So that's my opinion on it. We're going to move on to the next stock now. Target. Who am I bringing a retail stock to your face, huh? Who am I doing that? It's me. I'm doing it. You want to know why? This brick and mortar retailer here, Target, has done great things over the last year. They've seen incredible gain here from 2020. It's been incredible for their business. If you look over the last year, the stock's seen some benefit as well, up 68%. Pretty high for a retail stock, you can't lie. But we still need to look at valuation here. First, we look at Target itself, right? Target, we all know who Target is. Obviously, brick and mortar retailer, but most commonly known for, well, my main argument here for why this is the cream of the crop retailer stock right now is the fact that they offer same-day delivery via Shipt. Incredible benefit there. Same-day delivery is just top of the line. They also are the leader in terms of this e-commerce craze in brick-and-mortar retailer. This company is doing incredible numbers. They've also got drive up and order pickup. They got order pickup, which is pretty big. They were innovators in this segment where you place an order online and they come deliver it right to your vehicle when you pull up. So e-commerce is my method for growth here. If you look at their investor relations page, they'll show you where e-commerce is taking this company. Over the November-December period, this is incredible numbers. Comp sales grew 17.2%. That's incredible. While digital sales increased 102%. That is absolutely incredible. What else can I say? In the same time period, same-day services, including Drive Up and Shipt. Drive Up grew 500% during the time period, and Shipt grew 300%. Are you kidding me? That is incredible what they're able to do. I don't know. And again, you see this line of approximately 95% of Target sales were fulfilled by stores. That's not warehouses. These are stores that are fulfilling these. They're shipping out these orders same day and doing the Drive Up, obviously, too. That's significant in terms of a labor savings standpoint. So you need to consider that, and as well as obviously shipping, because they're probably shipping to the places closer to them. If you look at valuation on this company, trading a market cap of $91.86 billion, forward trailing P of 24.3, that's cheap. Forward P of 21.28, price to sales 1.05. This is a overall cheap valuation on this company. Because you look at the revenue, what they've been able to do, this year's been significant. We're talking about a year-over-year comparison here. They went from last year doing $78 billion for 2019 total. In the trailing 12-month, they're at $88 billion. We've seen a $10 billion growth in this company. It's quite incredible. And again, the market cap's increased by quite that amount too. But this company was trading at a cheap market cap before that. Market cap of $91.86 billion. The revenue is right at that line. We're talking about a stock trading pretty well even in the market cap. I think that's pretty darn cheap. That's pretty darn cheap for what this company is able to do. And on top of that, my main big thing here with Target, it's incredible. You look at the dividend scorecard here. This is a company that does incredible things here. Dividend yield of 1.48. Payout ratio is only at 29.5%. So this company's got room to grow with this. And speaking of growth, this is a dividend king. They've grown the dividend 52 years consecutively. So if you're looking for a great value stock to hold, great dividend, this company's got you covered, okay? Target's got you covered, and I do think you'll get some valuation increases in terms of overall stock price as well. So you're going to see some capital gains as well, so you'll be enjoying that. That's what I got for Target. This is an incredible retailer. I'm picking more up, okay? Then I've got, not clicking on ads here, but I did. Whoopsies. Last one, some people might say it's contentious. It's Nvidia. I was searching for stocks, and I didn't want to do anything that's gone up so incredibly high that some people may think the valuation's scary. Me, I traditionally like stocks with good value. Nvidia is pretty highly priced. Over the last year, up 100%. There's no doubt this stock's pretty highly priced, but there's reasons for it being on this list. If you don't know Nvidia, go to their website. Obviously, most known for their relevance in gaming in terms of chip production. Incredible stuff. They make top of the line technology that makes really your gaming experience as good as it can be in terms of not only appearance but performance. They also have a cloud business, autonomous driving segment worth looking at. AI. This isn't everything. This is their biggest segment, obviously being the gaming and entertainment. But again, it's a very diverse company though too, which is what I like. Obviously, you look at the most recent in terms of what they've been doing here. This company's it's got some good stuff. We look at the most recent earnings here. Once it loads, I swear this was pre-loaded. Someone hit backspace on it. Where they posted a record quarterly revenue as well as record full year revenue, which was up 53% year over year. Full year revenue up 53%. 50% growth when you're talking about billions of dollars, that's quite dang incredible here. Company's top of the line in what they do, there's no doubt about it. Now we talk about market cap, and we may say this is expensive, right? $16 billion in revenue for the year, trading in a market cap of $339 billion. I'm not going to argue and say that's not cheap valuation. It's not. Trailing P of 79, forward P of 41. But what I would like to argue here, for the history of this company, I think this stock isn't necessarily crazy valued because of what you're going to get in terms of future gain. That's what I really like to think about with this company. It's the future value that you're going to see, because you look here in terms of this revenue. I mean, it's good. They went from $10.9 billion in over a year's period, increased that to $16.6 billion. I mean, again, 50% growth as we saw. 50%. That's really good. This is a company that's going to continue to grow. And not only that, but we see an increase in this net income line. Net income line, pretty solid. It's going to be solid for this company in the future as well. So I think this is a pickup for the long haul, because even at these high valuations, this stock's got a lot of room to grow, because this is a company of the future. The way they're diversified, they've got everything going for them. That's why I think Nvidia is a stock to pick up. You're going to like it, okay? That's what I got for you today. Really hope you enjoyed this, and tell me what you like. Tell me what you disliked. I'm all for it.